I am an idiot. You should have already known that. This video is going to be on Grocery Outlet, ticker symbol GO. And as of watching, the earnings call just finished, right? I just read through the earnings report, and the stock is down more than 20% from 8 something, high 8s to now like the high 6s, right? It dropped more than 20%. So what the hell happened? Why did the stock drop? Is Grocery Outlet doomed? That's going to be the subject of this video. And in my opinion, so I guess too long didn't watch, right? I'm still holding the stock. I still believe in this company. I still believe in their model, and I still believe that their model has room for success. It does depend on management execution, but I do believe in. I'm not saying this because I just want to bag hold, right? I do believe in management. I do believe in the steps that they're taking, and I also believe in their model, right? How their business model works, for multiple reasons that I'll lay out. I think that the overall theme of this earnings call is basically just growing pains. That's the entire theme of this earnings call: growing pains and just growing way too fast or trying to expand way too quickly. And so they flew too close to the sun. So let's just talk about the numbers first, and we'll go into why I think the business model is starting to kind of shift, and we'll kind of see how, and I'll talk about what management is doing to kind of get back on the right track. So this is just the earnings report, and you do see a lot of pretty bad numbers and pretty good numbers, right? So net sales increased by 10.7%, 1.2. So net sales are increasing, but comparative store sales declined by 0.8%. This is the second quarter that comparative store sales declined. So that's something to keep track of, right? I'm gonna talk about that in a later bit. Next thing, gross margins were 29.7% as compared to 29.2% to 29.5% last year. And this is one of the main points that I'm kind of harping on, why I think that Grocery Outlet is I guess why I really like their business model, because I have these two other things open, right? So let's look at Walmart's gross margins, right? 24.9, we'll say 25.1 as the higher number. So it's 4% higher than Walmart, right? Let's look at Target. And these are just two grocery stores that I just thought of instantly. I didn't like pick through the ones, whatever. Those are just the two things that I found. This one, gross margins 26.6, or we'll just say 27.9. So as we can see, this 29.7 is a much higher number. And where do they get this 29.7% margin? Like, how are they doing so much better in terms of gross margin? Obviously not in terms of everything else, right? So this is doing pretty well because of their opportunistic pricing model, right? They're able to buy things super cheap and sell things to their customers at a slightly marked up price, but they still get those margins. I forgot to mention this here, but then I mentioned this in the later part of the video, but another reason why their margins are so high compared to other retailers is because of their lowered shrink or lowered shoplifting, and as well as also the fact that they don't have to hire employees. They work with independent operators, so they don't have to hire employees. They don't have to pay their wages and all those things, right? Those are all dealt with by the independent operators, which is one of the reasons why, like, this high number is one of the main reasons why I think that Grocery Outlet's business model works. So let's continue, right? Operating loss was $234.8 million, where a lot of these losses are coming from, right? Net loss was $2.22 per share. So that's a big thing, right? But this is because, in my opinion, they tried to grow too fast. They tried to expand too quickly. So goodwill impairment, and also non-cash impairment of long-lived assets, right? So that's like exiting leases and things like that. So just a quick note about this loss, like operating loss of $234.8 million. It's a big number, right? So a lot of it I attribute to them just growing too quickly, as I mentioned before, right? They're closing, I think, 34 or 35 stores on the East Coast. And I think that was because how management portrayed it is basically Grocery Outlet started in California, right? So California, if you live in California, you should know about Grocery Outlet. But when they started expanding to other states, they kind of felt that this name brand would stick with them throughout other states. And that's the problem, right? When you expand to other states, people don't know you as well as people know you in California. They thought that they could kind of leverage their name and their branding that they have in California and move that over to other states. But in other states, no one knows about Grocery Outlet, right? So when you expand to a different state where people don't know about you, they don't know about your opportunistic pricing, they don't know about all those things, they just know it's Grocery Outlet, so maybe there'll be cheap groceries. But then there's a lot of stores that have cheap groceries, right? Aldi's has cheap groceries. There's a lot of discount retailers that have cheap groceries. People don't know about that perk of shopping at Grocery Outlet. So I think that that's one of the main things. And when you expand too quickly based off of this false premise of people will know about us, so people will recognize our brand, so people will shop at our place, I think that's a big thing that management missed. That's why, in my opinion, one of those reasons why management shut down those 35 stores. And regarding those 35 stores, in the earnings call, management did say that that's not like the entirety of their entire footprint in the East Coast. So those were the stores that they said that they did a thorough investigation in all the stores that they opened. Those were the stores that management said that they did not see a reasonable path to profitability. Aside from those 35 stores, I think that management did say that also out of the stores that are still open in the East Coast, those stores actually saw a 3% comparative store sales increase, right? As opposed to the overall, I think 0.8 sales decrease, comparative sales decrease. But that's in general, that's also including those 35 stores. So now that Grocery Outlet has actually offloaded or has begun offloading those stores. So now that we've offloaded those 35 stores, I do see that comparative store sales to start increasing again, hopefully, right? Obviously. This also depends on execution. This depends on a lot of things. But again, I do want to touch upon that. I'll just talk about it now. The reason why I'm so confident in Grocery Outlet's success, or I'm not super confident, right? Because it does depend on management execution. But one of the main reasons why I think I do really want to believe in Grocery Outlet is the model for success in Grocery Outlet is the same model for the success of America, in that it's a very capitalistic way of running a business, right? It's ownership. It's ownership. So how the business model works for Grocery Outlet is Grocery Outlet, right? It's not a franchise. Grocery Outlet, it's kind of a franchise, but basically what they do is they have this independent operator model. And what I like so much about this independent operator model is it basically provides an opportunity for people that want to be independent operators to have ownership in a business without having such a high startup fee, right? For example, McDonald's, you have to have like $1 million just to franchise. There's a bunch of other things, right? But then basically what happens is, I think from what I researched, it's only like a 25 to 50K startup cost, and Grocery Outlet does do a lot of the loans, right? They offer loans to the independent operators. They offer a lot of training. They offer a lot of support for the independent operators. And those independent operators, they share in the costs and they share in the gains, right? In the margin. So any profit that they make, the independent operator will share, we'll say, half of it, right? Any losses that they make, that they incur, the independent operator will also incur half of the losses. So why do I like this so much? It's literally just capitalism. It's a microcosm of capitalism, right? As I said before in a previous video, if you just have a manager, right, in the likes of like Walmart or Target or whatever, they don't care if people steal. They don't care if people don't buy your product. They don't care if things just rot on the shelf, right? But as an independent operator, where your livelihood depends on people not stealing your product, depends on people actually buying your product, right? You're gonna work your hardest in order to try to increase your profits as much as possible, and in turn, you're increasing Grocery Outlet's profits, right? And I think the best thing about it is there's also a low startup cost, right? So independent operators, you're not kind of gating you're not gating capitalism in the way that capitalism is kind of gated right now. It really is a microcosm of, as long as you have a dream, you can, and you work hard, you can succeed. And that's one of the main reasons why I really like this business model of Grocery Outlet. And I think that this specific Remember, independent operator, it's basically just they have ownership of their specific store, right? And because they have ownership of their specific store, they want to succeed. And in this case, there's mutual benefits, right? Both grocery outlet and the independent operator succeed, and they both want to succeed. Additionally, I did some research on shrinkage, which is basically just theft, right? I saw that even out of all theft, I think around 30% of theft happens because of employees, right? Employees are stealing their own product. And the problem with the likes of Walmart, Target, Safeway, management themselves could be stealing things, right? But when you have independent operators, those managers are going to be more willing to micromanage, right? And to be more willing to understand, they'll be like boots on the ground, they'll be watching, right? So then you do reduce that shrinkage. Even in the earnings call, they did say that they reduced shrinkage. In other words, they reduced shoplifting, right? So that's another benefit, that's another edge that Grocery Outlet has against their competitors. So let's just continue going down this earnings report, right? So again, comparative store sales increased by 0.5, but that, whatever, right? Net sales increased. Comparative store sales increased by 0.5, but that's year over year, not quarter over quarter. Quarter over quarter actually dropped by 0.8%. So I mean, it's increasing year over year, but like that's not that great. I don't like doing year over year comparisons. I think that's stupid. Operating loss. This was a big operating loss. I already talked about that. Let's see what happened here. Comparative store sales for the quarter was adversely impacted by the delayed disbursement of benefits from federal relief. So this is the problem with SNAP, right? Another key point I want to mention in the earnings call, they also said that after the SNAP benefit was paused for a bit in Q3, they expected a quick rebound, but that actually didn't happen. And they do still see like a slight tick off, right? A slight decrease in SNAP benefit purchases or what is it called, customers, but that is starting to bottom out and starting to go back up. So that's something to look out for, and that's something to closely monitor, right? Because I'm sure a lot of their customers do use SNAP, right? It's Grocery Outlet, think about it. Improved inventory management, partially offset by price investments into mix shift. Oh, another thing is Grocery Outlet was also, I guess when they expanded so quickly, they got rid of, or they stopped having as many opportunistic pricing products. And I think that this is also a big thing, right? People go to Grocery Outlet for their opportunistic, for value, right? They go there for their super cheap treasure trove hunts. And when you reduce the amount of treasures that you can find, you were reducing the value that your store is providing. So that's just a stupid thing. And then and they said that they'd be returning back to like increasing, like I guess that being the main driving point or the main product that, or the main value that Grocery Outlet provides. So I'm thankful for that. And after this earnings call, I'll probably have to shop here more often. As a percentage of sales, SG&A, this also increased. I don't like increasing SG&A at all, especially as a percentage of sales. So that's definitely something I want to point out, and I want everyone to be aware of, right? So just keep this in mind and just monitor this if you're still in the stock, right? And that's basically it. Let me look at the notes. So for my notes, I have a few things that I took during the earnings call. First thing, for new stores that are opening, right? They're first gonna have it company run, and then after it's been company run for a while, maybe after some training, then eventually they'll offload it to an independent operator, which I think this is much smarter, right? This is very smart. This is a way to reduce on any on kind of just like the onboarding process, right? And so before it was just you open a store and then you find an independent operator after they've done their training and they go in there. But now it's going to be you start a store, right? First it's going to be company run, and maybe they'll get like an experienced independent operator from a different place, different state, different region, and ship them over here. They'll work on that part for a bit, and then a new independent operator after they've done their training comes in, does their onboarding together, and then gets a feel for it, and then they start running their business. So that's definitely, I think that's a good idea. And maybe for the places where in grocery outlets more established, right? For example, in California, when you have your brand awareness, you have all those things, then maybe they can just shift from training straight into independent operator rather than having the company run it for a bit. But I definitely do think that that is a better approach to new stores where the brand of grocery outlet isn't as well known. Next thing, I did mention that store sales, comparative store sales falling is not a good thing, right? And how they're alleviating that, or what management said to combat that, is they're going to be increasing their opportunistic pricing, fines, right, and leaning more into opportunistic pricing, which I definitely do believe in, right? That's the value that you're supposed to bring. So provide that value, right? They mentioned that they would be restoring their pipeline within 3 to 6 months. So that is a pretty long timeline, right? That's like 1 or 2 quarters worth of execution. So I will be looking for that. And management also said, as I said before, that they see a bottoming out they saw a bottoming out in February, so that's something to pay attention to as well, right? If you continue to see comparative stores sales decreasing, then we have a problem, right? If you don't see SNAP benefit users starting to buy your things again, we have a problem. So definitely caution, right? Caution. Look at those numbers, but continuing. I said this entire quarter was basically just growing pains, expanding too quickly, right? In a lot of my previous videos, I mentioned how you see new stores opening left, right, and center, everywhere, right? West Coast, there's a lot of stores opening, and I think that West Coast, I think that those stores were fine. I think all the stores that they closed, the 35 stores that they closed, were in the East Coast, where I guess Grocery Outlet's brand wasn't as well known, right? So all the stores that they actually have open still, like removing all the ones that they just closed, those are actually experiencing, I think they said on average, a 3% increase in comparative store sales, which is a good thing, right? Those ones are actually profitable. And again, as I said before, capitalism, when you have ownership, you want your business to succeed. It's not managed, it's not a wage, it's not managerial, right? You want your business to succeed. And I think that is one of the main points for why I'm investing in Grocery Outlet, right? You're investing in this, basically the American dream, is my opinion. So that's basically it, right? So I'm down another 20%. I'm sorry if I talked any of you guys into this. I'm just an idiot, right? I'm just some stupid talking head on the internet, and anyone with a computer can talk about things. But yeah, I'm holding this. I still believe in the stock. I believe in the company, and I believe it. If you believe in America, if you believe in why America has succeeded, I don't see how. Okay, it's different, right? But like, Grocery Outlet offers value for their customers, and they offer opportunity for the people that they work with, and I think that that's a really, really big value proposition, right? You have a steady supply of people that are going to buy your products, and you have a steady supply of people that are willing to work for you, and they're not even working for you. They're kind of working for you, but they're also working for themselves, right? And I think that that's a huge value proposition that we might need, right? Especially when you see wages, they're constantly going down, right? When you see I think I saw that when you compare to gold, right, you're actually getting paid like a third of what you were getting paid, or a fourth of what you were getting paid in 2008, in 2007, 2006. So as wages are still starting to go to shit because of inflation and because of the devaluation of currency, right? And people are looking for new opportunities to earn money, and owning a business, having ownership, and being able to decide your wages, and being able to have an actual a tangible impact on how much money you earn. I think that's really good, right? So again, this was not that great of an earnings call, obviously, but I am excited for the future. I do believe that Grocery Outlet has room to grow. But to wrap it up, I believe in Grocery Outlet, right? I'm still holding. But yeah, that's basically my summary on Grocery Outlet's earnings call, right? It's definitely a growing pain. It's definitely a growing pain type of earnings call, right? They expanded too quickly, too fast, and now they're taking a hit for it. But I'd rather them take the hit now and just cut their losses than for them to just be stubborn and then just say we can do it. I'm glad that they're being wise and just taking the hit now than to let it fester in the future. Again, my thesis relies on, first of all, management executing, and also it relies on their business model in general, right? The value they provide for both of their independent operators and their customers is why I'm invested in Grocery Outlet, ticker symbol GO. I'm not gonna have a good day right now, but try your best. Have a good day.